All right, so things look like they're getting a bit shaky, a little bit hairy again. Bitcoin back below $70,000. But what's going on in the geopolitical landscape that is causing these shakes in the market? Because the S&P 500, Bitcoin, everything kind of going down a little bit today. So we need to know what's going on so we can make informed decisions. And jumping straight into it, we can see Bitcoin 69,500 right now. Still very much keeping in line with our bear flag. Just staying right in the middle of the bear flag right now. We've not even managed to come down to the lower level of support, and we haven't been since March 17. So what, about 10 days now since we were last up at the resistance. So being right in the middle doesn't give me a great entry for adding nor taking profits from the long trade. And if we do give a little bit of a refresh here to our Bitcoin exchange liquidation map that we like to look at, it's the 30-day chart here, we can see something interesting starting to peep its head out. We've got 7.6 billion of short liquidations and about 5.6 billion in longs. If you're new to the channel, this is one of the pieces of data that I like to look at every single day to try and figure out what the overall market is doing or where they're placing their bets. I like to take the opposite side of the bet, but I need a clear view on what the market is doing, and they need to be very one-sided. Right now, we're still kind of equal, right? We're only a few $1 billion short in the long side than we are off the short positions. Short, I mean, there's only a little bit less long. So what I like to see is for the longs to kind of be wiped out of the market, and then that gives me a little bit more of a bullish idea on the market. Whereas right now, today, it's not looking too clear. What's going to happen is if Bitcoin heads lower from where we are now, heads more towards the lower level of the bear market, or the bear flag, sorry, then that's when people start to go short. Some good traders are going short up at the resistance, but a lot of retail traders, they're going to start going short at this support level. And then, of course, the breakout traders we'll do something like this. If we come down and we break this lower level of support, come down, come up and retest, we're going to get a lot of shorts come into the market. Then probably the market comes down a little bit. People have even more shorts piling around these regions. Maybe we go down to retest the liquidity that sits around here. And then normally we have a pump. So bouncing here, or bouncing here is something that I would expect given the current market. Now, you might be asking, Connor, why would you think there'd be a bounce? This is such a bad time for the markets. Well, everyone thinks that, right? And that's basically, right? You could just ignore and discount everything else in the market, apart from the fact that most people were bearish going into the geopolitical tensions, right? They were expecting Bitcoin to dump with everything else, and then it didn't, right? Because the contrarian take would be that in a market that everybody thinks is going down, then we get these bounces. Now, that's not to say I don't think that we're just in a normal bear market and we're not going to go lower. In fact, my base case still remains the same. I still think we're going to go lower. That is why I'm preparing to buy more if we break $60,000. But right now, like I said, we're seeing Bitcoin drop. We saw the S&P 500. Today, it's not looking terrible, but yesterday it did have a push to the downside, only around 1%. And it's quite interesting seeing things are escalating, but the markets aren't behaving extremely erratically. In fact, with my thesis, I'm preparing for a bigger push to the downside for the S&P 500, a bigger push to the downside for Bitcoin, a bigger push for the downside to some individual stocks that I own, like Amazon. And I'm actually waiting for this to happen so I can deploy the cash that I've been building up slowly. Normally, I DCA. When the market's kind of boring, traveling sideways, maybe going up a little bit, I'm just DCAing over time into things like the S&P 500. But in really uncertain times, like right now, right, we see escalation in the Iran-Israel-US conflict, but we see de-escalations and we see tweets, and it makes the market go crazy. So what I'm waiting for is confirmed things like a bear market. Bitcoin is confirmed technically to be in a bear market. That's why I was buying down all the way as low as 60,000, right down there. That's why I am willing to buy the S&P 500 if it goes lower, but I'm actually waiting for those lower prices. If they don't come, it's very simple, right? If we just continue upwards again, I'll just go back to DCA. But right now, right, I just think, okay, well, I'll just build my cash pile cash is king in an uncertain environment. I'll just build that cash pile and I'll wait patiently. If I get the opportunity for Bitcoin, if Bitcoin has a big black swan event, it cascades below 60, maybe 50, maybe 40, that's when I'll deploy heavy capital into Bitcoin. If we get a confirmed bear market for the S&P 500, which by the way is about a 20% drop, then I'll start deploying capital into that. If I get a massive push down for Amazon, which you can see here, I'll put into that, and so on and so forth. This is how I like to behave in a market environment like this. So a normal market where there's not many crazy things happening, just normal weekly DCA, looking for opportunities in the market, of course, doing my trading. And then in geopolitical uncertain times where nobody can tell you for sure what will happen unless you're sitting in the office with good old Trumpy pants, we don't know, right? So cash is king in this environment, so I'm waiting patiently. Now, with that said, I'll catch you in the next video.